Hi, thank you for joining us. We are the SVN Phoenix Multifamily team, and we're happy to share with you some of the data and statistics from 2018 for the multifamily market here in Phoenix, as well as some outlook and trends that we're seeing in 2019, along with the first couple months of data, January and February, giving you a sneak preview into how Q1 is shaping up this year. I'm Carrick Sears.
I'm Vicente Gandua.
And we are delighted to have a new team member join us who just recently graduated from ASU last year, Kevin Weller.
Go Devils. I'm excited to join the SVN multifamily team in a big year for us. Carrick will share that with you right now, actually.
Yes, we do have some exciting news. We were just named to be part of the Ranking Arizona magazine. We cracked the top 10 for the best multifamily teams in Arizona this year. So you're first to hear it. We wanted to let you guys know that. And also, last year was a record-breaking year for multifamily sales here in Arizona. We transacted $6 billion in multifamily transactions, the most our market has ever seen change hands. So things are still going like fire here in Arizona when it comes to multifamily.
Kind of like the weather in the summers.
It's hot. It's hot. All right, we wanted to share with you our 100 plus property data for you. So up there on the screen, we are putting on, these are the transactions during the whole year of 2018 that changed hands that were 100 or more units. And these properties do not include student housing. We did leave out student housing and condos so that we could have a more apples to apples comparison on true multifamily properties. So our volume for the 100 plus unit properties was up 27% year over year. When we looked at the price per unit, we were up 21% to $150,000 a door, and price per square foot up 17% to $163 a square foot. So significant momentum continuing in here in the multifamily market.
Absolutely, yes, sir.
If we take a look at the top 3 transactions by sales price per unit, we see that the top transaction that traded last year was the Emerson on Mill Avenue at $279,000 a unit.
And I think one important thing to know with Emerson is that it's still kind of in that ASU sphere of influence, right off Mill Avenue, right by the Mill Ave, kind of all the bars, as well as a bunch of the entertainment off Mill Ave as well. It's a great place for young adults to live. It's a great place for some of the upperclassmen in ASU to live as well that want to get away from that southeast corner kind of younger crowd vibe. Makes sense. Yeah.
The second highest transaction traded last year was the Greenleaf Arts District that sold for $271,000 a unit, followed by the Crescent on Highland that sold for $258,000 a unit.
And we actually just got the listing agreement for the ground floor retail there, so 8,000 square feet of Class A retail. If you reach out to SVN's office, I'm sure they'll put you in touch with the right person. Yeah.
That's right. Now let's take a look at the 10 to 99 unit properties that sold last year. Vicente, can you give us those highlights?
Yes, for the 10 and 99 units, we're again seeing a record-breaking year. So our deal volume was $538 million, which was 32% higher year over year than it was in December. We also saw a 18% increase in the price per unit per sale, so just a little over $101,000 per door. And we also saw a 13% increase in the price per square foot, which is now about $125 per square foot. And then we sold actually one of these properties to a California investor. Just 3 units she traded from some condos she had in California. Bought 12 units out here in the Coronado district for about $123,000 a square foot at a 5.7 cap, so cash flowing much better than anything she would have found in California. And then for the top 3 transactions, we have the Dusk at Scottsdale. Those 41 units sold for $283,000 per unit. That was built in 2016. And Kevin, you know some interesting information about that?
Yeah, so obviously Dusk is a super high-end Class A building. One of the other amenities that is kind of interesting and is a new thing kind of for the Valley is a net carbon neutral building. So not only do they use a lot of solar power to use electricity, but they also put electricity back on the grid. It saves the tenants money, which is something that any tenant would want, that's for sure.
Absolutely.
Additionally to that, they also have the car charging ports for your Teslas. So
cool.
Great place to check out if you're into being able to golf, honestly, at the beginning of the day.
I guess you know that since you're specializing in the East Valley.
Yeah.
Makes sense. The Grove in Phoenix was the second highest price per unit transaction at $270,000 per unit, and those 42 units were built in 2018. And then rounding out the top three was the place at Alma and Chandler. Those 77 units sold for $255,000 per unit, and that was built in 2017.
And that rounds out our 2018 market highlights that we wanted to share with you. Last year, our market rent growth was 7.5%. You can see here with the chart, based on the different asset classes, the varying amounts of rent growth, but certainly in the Class B section, saw the most rent growth, 7.4, 7.8%. So very, very high rents, even along with the new units coming online that have been able to be absorbed due to our great demand that we have here in Phoenix. Speaking of new units coming online, Kevin, can you tell us about some of the highlights of construction activity last year?
Yeah, so last year we had over 8,100 units come online. Through the three highlights, in my opinion, and this is kind of an East Valley centric highlight film. Lakeside Drive in Tempe was a 150 unit building. It was delivered in March. It was phased out over a couple different phases. Actually, just sold in January for $44.5 million to a buyer out of San Diego. At a 4.5 cap in Tempe, which is kind of becoming the new norm for Class A properties, just shy of $300,000 a unit. The second one that was delivered we have is the Union Tempe, which is more or less student housing. It's not being built out as student housing yet. I wouldn't be shocked to see it go that way. It's a mixed use development. They just opened the Starbucks on the corner, which I drive by just about every day on University. It's always packed, so you know that building is on its way to stabilizing and getting better and better every week. And then the third property that we're going to talk about is the Carter Scottsdale. The Carter is a massive property, 365 units, just south of Old Town by Tom Scott and by the new Alta Drinkwater development, which will be opening soon as well. And one interesting thing to note about the Carter is it is currently on the market. You're not going to see it anywhere, so if you want to be able to put an offer in on that down the road, please contact us and we'll help you with it.
Great. And last year saw a large population growth here in the Phoenix Metro. In fact, 220 people moved here every day. Last year, our population grew by 81,000 last year. And job growth was even more phenomenal. We added 86,000 jobs last year here in the Metro Phoenix. And that was up 3.6%, much higher than the U.S. national average of 2.1%. So all these contributors are helping for a very robust multifamily market. Job growth, income growth, and population growth are the three big factors we look for in a strong market. Looking ahead into 2019, we certainly have some strong numbers coming out of the first 2 months of the quarter. So we want to give you a sneak preview so you can know a little bit of how Q1 was shaping up. And here we're going to be able to tell you that in the 10 to 99 unit space, the volume is down just slightly, but the price per unit is up 26% when we compare this year's January and February to last year's January and February. Coming in this year, $120,000 a unit average, and the price per square foot basis up 15% to be $148 a square foot. And then when we look at the 100 plus units, tremendous volume these first 2 months out of the year compared to last year. We're up to 1.1 billion, and if we annualize that, we definitely believe we're going to be at a $6 billion year again this year. And then on a price per unit basis, we're up 18% to $160,000 a unit on average. And the price per square foot is steady at $160 a square foot. And this means that based on these 2 months out of the year, the units that are changing hands are largely a lot of Class A buildings, over 100 units. And they're a lot larger in size, 822 square feet on average last year compared to 994 square feet this year. So a lot larger units.
I think there's two really interesting things to note there in both the 10 to 99 and the 100 plus. In that 10 to 99, we didn't see a really high volume. I think part of that may be that the inventory is a little bit down, which is a great opportunity for you if you own and are thinking about selling in that range. And on the 100 plus units, I think that that volume going up, we have seen a lot of Class A stuff trade hands over the last couple months, and that's definitely contributing to the growth. But still, even the rest of the 100 plus units that are in the C class still seeing phenomenal activity, that's for sure. Oh, yeah.
So for this year, we definitely see another $6 billion year and 15 to 20% overall price per unit growth throughout the entire year on average. With the new units coming online, they are being able to be absorbed with the population growth and the job growth. They're really getting eaten up. In fact, when you look at occupancy, Our occupancy last year was at 95.3%, which was 50 basis points higher than in 2017. So really strong demand for these apartments, and that's causing the rental rate increases as well. Our population growth and job growth, we continue to expect those to be strong throughout this entire year. And rent growth, in 2019, our forecast is for a continued momentum in the positive rent growth, but a little bit slower, not the 7.5 we saw last year, but more of a modest 4% this year is going to be our rent growth estimate. Now let's talk a little bit about our new construction activity that we're expecting to see in 2019. Kevin, if you can share with us some of those details.
Yeah, so I'm going to go over 5 different properties, and those are all part of the 7,600 units that are going to be delivered over the next year or so. The first one we'll talk about is the Sky at Chandler Air Park, just south of the 202, down in the Southeast Valley. 504 units of Class A garden-style apartments, so it's spread out over a large area. One of the cool things about that I was kind of surprised by was the indoor basketball court that they're putting in.
Nice.
For the hot Arizona summers, you're not going to be playing basketball outside at 120. So yeah, it's one of those things that I think is a unique addition to a property that's going to pay off for them in the long term. The next 2 will be in Tempe. The first one being the local, highly anticipated project by I know a lot of students and a lot of young professionals. It's going to accommodate 286 units. It's also going to have a ground floor retail space, in which will have the Whole Foods downstairs. That's an awesome feature, in my opinion. Maybe the best amenity you can get, being that it's easy to go and shop after work versus something I'm learning a lot about over the last year. Then the second one is the R at Watermark. The R at Watermark, another Class A building, supposed to be competitive for the nicest building in Tempe. It's going to be over in the new Watermark project, so the office space right next door to that, with lake views across the board, actually stealing lake views from the Vila property.
Yeah.
So those residents aren't going to be as happy, but I'm sure the residents at Aura will be. Those 360 units, and they're just about to start their pre-leasing, which is pretty cool. The next property is going to be the Stewart in downtown Phoenix. That's the new mid-rise that's got the pool on one of the top floors, so the shorter tower with the top floor. It's going to be a really cool thing to see in the downtown Phoenix skyline. You're going to get unobstructed views of the Tempe and Phoenix skylines, which is it's going to be a pretty cool addition to the Phoenix market. In addition to that, sorry, I'm going to shuffle my papers here. We also have the Block 23, which is similar to the local in Tempe. It's going to be with ground floor retail space used as a grocery store. This one's a Fry's at Whole Foods. Not as cool. It's still a nice amenity for many residents to have. And it's going to be right across the street from the Talking Stick Arena, which is the home of the Phoenix Suns. I don't think you're ever going to be bored at either of those 2 locations in downtown.
And this is the 3rd block of the cityscape development. So what we've been waiting for now is this Block 23 to get developed.
Yeah, it's nice to see downtown Phoenix really come into its own. I mean, we've seen a lot of development in Tempe over the last couple of years, but it's nice to see Phoenix start to catch back up.
Absolutely.
With that being said, I actually have 2 properties you're going to start to see in these segments, properties that we've toured and that we've kind of gotten to take a look at to talk to you in a little bit more depth, so that you can take some of the ideas and put them into your properties as well. So Jefferson Town Lake and Novel Rio are on tap for this time around. Both just opened in the last couple months. They're being phased out. So Jefferson Town Lake is being rolled out in 4 separate phases. The first is being leased up currently. It's on the north shore of Tempe Town Lake, directly across from the Watermark. So it's going to be on the other side of Scottsdale Road. One of the cool parts about that is it is directly off the 202, so it's going to make commuting very easy for its residents. Some of the unique amenities are going to be the wine tasting room that they have right by the leasing office. Something it really is a race for amenities, which I know you'll get into later, V. On top of that, you have the super spacious rooms that there and the interior courtyards, and to top it all off, an infinity edge pool. Right. Looking directly into Tempe Town Lake and over the Tempe skyline, so that's going to be something cool to look out for when it's finally finished. And then the second one, Novel Rio, which really pays homage to the old Art Deco buildings of Tempe, and it's really a pop of color that comes into the Tempe area that we haven't really seen in a while. A lot of blues in Tempe, they've taken the opposite approach and gone orange with their doors. And it really does. It looks like an old 1970s building. It's an absolutely beautiful building. And one of the cool amenities there will be the gear room that actually let you use Tempe Town Lake with paddle boards and kayaks and other cool things that residents will be able to take full advantage of.
Nice.
Okay, awesome, yeah.
When was the last time you were paddleboarding?
It's been a while. I wouldn't go in Tempe Town Lake, but I guess some people will.
Right.
It is very scenic. And
And
great
like-
job as apartments next year.
Yeah, like Kevin was saying, I'm briefly going to touch into some of the trends that we're seeing. So Price Waterhouse Coopers came out with their emerging trends in real estate report for 2019. And yes, the amenity race is one of the biggest things they talked about. In fact, a lot of the report is how valuable apartments will continue to be in the future. So yes, the amenity race, they're trying to get as many tenants as they can into these urban core environments. And how they're attracting them is by getting amenities that other places don't have. So the standard now is what everyone wants, and they're talking about things like being able to control the AC in your apartment when you're gone. You leave and it's cool, but you come back, it's super
All our
hot.
cell phone apps.
So all that
The
kind of
Nest,
things
the
like
Nest
that.
implementations. Yeah.
All that things, so big time amenities.
So really bringing those features we see in homes
Yeah,
and out of the apartments.
exactly. And it's just ubiquitous. Everyone wants it and expects it. So just know that's what you have to be competing against for your A-class properties. Another cool trend is that now the 80+ million baby boomers, a lot of them are in their mid to late 30s, and so they're now following the trends that people used to do of having a family and moving to the suburbs. So even though there's lots and lots of people and millennials in the urban core environments, they're all now going back to the suburbs. So in this Price Waterhouse Coopers report were about 4 of the best bets of 2019, and one of them was garden style apartments. Obviously, you're seeing the tremendous demand for them, and you continue to see that, especially in the suburban apartments and these garden apartments where people need larger spaces for their families. So, I expect that to be a major trend going into 2019 and beyond.
And that's something that the air park down in Chandler is really taking full advantage of, given that it's more of a suburb and less of a city.
True. Exactly, and luckily there's still plenty of your generation that's going to be wanting that urban core apartments.
Yeah, Gen Z, we're the ones moving into everything the millennials are moving out of. So we'll be there to keep your wallets.
Exactly. Still keep building in that core. People still want that. And then rounding out one of the other top best bets of 2019 were your fix and flip apartments. And so there's still a bunch of apartments where you're able to make tremendous yield by going in there, fixing them up, raising the rents, and selling them to a California buyer who is going to be appreciating the higher cap rates that they're getting in their home states. And so those, I just thought it was interesting to point out some of the very top best bets of 2019 are apartments, and will continue to be so for years to come, according to this report.
Great, thanks Vicente for sharing that. Speaking of Gen Z, Kevin, can you tell us a little bit more about Gen Z?
Yeah, so the new Gen Z report that actually was sent out to a lot of our email list earlier this year talks a lot about some of the new buying trends that Gen Z will have, and it really does go hand in hand with the Price Waterhouse Cooper report. It really shows you that it is an amenities race. At the end of the day, we don't necessarily want to buy houses. We're more interested in renting right now because, one, it's a lot easier for us to, like I was touching on earlier, to come home and not have to worry about mowing your lawn,
Yeah.
doing any of that or other adult stuff.
Right.
But I mean, yeah, it really does come down to what the amenities that each property has. Even if it's a Class C property, we're starting to see a lot of Class C guys come in and do as many different amenity packages as they can. So a lot of the stuff you see in the East Valley, especially Tempe, is a lot of additional stuff done to the courtyard areas of those Class C buildings.
Absolutely.
Great. Well, we just got back a week ago from Miami. We had our SVN National Annual Conference where we come together with all of the other offices throughout the world and learn about great new things going on to bring back to our clients. And we heard from a couple of great speakers. We wanted to share with you some highlights today. The first one was Mark Dotzauer. He's a very well-respected economist, shared with us some great insights on the economy. And Vicente, can you share with us some of those highlights?
Certainly. So essentially what Mark liked to compare our economy to was, first of all, he said it's on fire. And he also said that if you want to think about it as a visual representation, just think about a jet in the sky, just kind of going 800, I'm sorry, usually not 800, but about 600 miles an hour, just coasting. That has no opportunity to basically have any kind of crash anytime soon. So he says that's basically our economy now. And part of the reason for this are, a bunch of reasons, but if you think about it, the reality is one of the best places to place money in the world is U.S. commercial real estate. So people are continuing to do that, and you're also continuing to see some other trends, which, according to him, you're not going to see a downturn in 2019. You're not going to see a downturn in 2020 either. And with the jobs that are being created, that's one of the main reasons. On average, in 2018, there was 220,000 jobs added to the economy, and just in January, there was 390,000 jobs. You've also seen wage growth of about 3.5%. So his optimistic outlook was, incredibly optimistic. If you want to talk about something like cap rates, he was saying they might increase if there's an expectation of inflation, and right now expectation is very, very low. So therefore, cap rates should stay stable. So commercial real estate is still a very, very safe bet. Even though everyone tries to say, we're in the ninth inning or whatever it is, unfortunately, the facts are we're just doing very, very well, and that should continue and be a record-breaking expansion period, which we'll see in the next few months here.
And it's not just Mark Dotzhauer who believes that. I mean, look at any of the major REITs.
Yeah.
There's over 20, just between three of the biggest REITs in the world, there's $22 billion set for real estate acquisitions this year. So if we were in the ninth inning, I feel like they may be pulling back a little bit. Maybe we're just starting that seventh inning stretch for all we know.
Exactly.
Very well be.
Price Waterhouse-Cooper's report says the same thing too. So we're seeing this from everyone. So you're in a good space right now to be in.
Yeah, that's for sure.
Absolutely. We also heard from Brian Bailey, who is with the Federal Reserve out of Atlanta. Kevin, you want to share with us some of those highlights?
Yeah, I think the number one thing to look at is everyone talks about the Federal Reserve and talk about interest rates, and this time around, we just saw interest rates are not getting raised again, and that's awesome to hear. We're sitting right at 2.25 to 2.50. It's great to hear. Brian Bailey also had some really interesting points when it came to warehouse space and retail space that I'll share with you guys. So I think one of the most interesting takeaways I had for Miami as a whole was the retail allottage per square foot in America versus Canada versus Western Canada versus China. In America, it's 24 feet for every man, woman, and child, right? In Canada, it was down to 14, and in Western Canada, it was down to 8. The shocker was China. China was 1 square foot per person of retail space, and that's just something that was super incredible to me. And on top of that, I think by 2022, I believe it was, Amazon wants to have at least 15 square feet per person in warehouse space in the U.S., and that's something that's awesome to hear, but it also shows you that the economy is alive and well.
Absolutely. What's interesting about all that retail as well for you multifamily investors is to look as that for one of the options for affordable housing, because with all that big space, you actually could use that as some co-op.
You start to see stuff being repurposed. Yeah.
Exactly. So actually, again, the Price Waterhouse-Cooper report says to look into that as well.
Yep, definitely. One of the things we're also doing is monthly lunch and learns.
Yep.
And just the other day, we had a lunch and learn on 1031 exchanges and deferred sales trusts. And so, again, if you weren't able to make it to our lunch and learn, just email us. We're happy to give you the content from that. Very informative sessions we're doing once a month for our investors so that you can stay informed and make better educated investment decisions. We also have a few listings we'd like to share with you right now. The first one is 19 units in Mesa. Kevin, can you tell us a little bit about that?
Yeah, so we have 19 units available in Mesa right now for $2.3 million. It's over a 6.25 cap on actuals. One of the cool things to know about that is it's right next to where the Oakland A's spring training facility is. So while you may miss out on spring training this year, you will have a reason to come out for spring training next year.
Exactly.
In addition to that, there is still a value add opportunity. It's mostly turnkey, so new granite countertops, stainless steel appliances. There is an opportunity still to add value and raise your rents immediately, pretty substantially in the addition of washer and dryers. It's already plumbed for it, so it really is just buying the units, putting them in, and you're good to go. So,
Cool. Awesome. We also are just taking to market a 44-unit property in Glendale, 75th Avenue, just north of downtown Glendale. And this property has been completely renovated down to the studs. New electrical, new plumbing, new drywall fixtures, everything, new roof, new air conditioners. And it's just priced at $130,000 a unit. It's like buying a brand new property. Very nice with a pool. And so reach out to us for more information on that, and we'd be happy to share with you. That's actually a 6 cap on actuals as well.
Yeah.
So great property. And
It just goes to show you there are still deals in Arizona. Not everything's getting compressed down to that high 4, low 5. There's plenty of time around.
Many of those deals are off-market transactions as well, so reach out to us because there's several, all the way from 10 to 200 units. And so, get those deals directly from us, or reach out to us as soon as possible before someone else does.
And anything that you heard today that you'd like more information on, please reach out to us. We're happy to share our insight with you. We pay a lot for subscription services to some great third-party research services. We're happy to share these reports with you at no charge, so just reach out to us. And we're also happy to consult with you. If you're not looking to buy and you're not looking to sell and you just want to hold your property, we're also happy to meet with you and help you minimize your expenses, maximize your revenue, and overall increase the value and performance and ROI of your property. So reach out to us. And basically right now with the market being at an all-time high, there's really different options you have, and we can help you do a side-by-side analysis so you can decide what's best for you. It could be to keep your property, it could be to refinance it, or it could be to sell it. Speaking of selling it, we have an amazing platform to take your listing to market, including our SVN Live, which is every Monday morning. We present properties that we take to market to the entire brokerage community as well as investors live on a conference call every Monday morning. And we also have a great platform with our Canada partners. Most of our properties that we sell in Arizona, a lot of the out-of-state buyers are coming from California and Canada. And so we are going to be sharing those listings on a regular basis with our Canadian partners so that those clients can have easy access to our deals down here.
Derek up there just hired a full-time staff member to maintain all the listings that we have up in Canada. So it really is going to be a platform that I think is going to help us a lot in property in the future.
Yeah. And if you do decide to sell, like we had the lunch and learn a few days ago, 1031 exchange is a great option. We also have a really unique alternative to a 1031 exchange called the Deferred Sales Trust. And very few people actually know about this, so we're happy to share it, but it allows you to capture the all-time high prices on the market today, sell your real estate, and put the money in a trust that is going to be deferring your capital gain sales taxes, so you do not have to pay any taxes when you sell your real estate at today's high prices. And the best part is you don't have to reinvest into real estate if you don't want to. You can put that money into stocks, bonds, mutual funds, and buy real estate down the road if you would like to, or not at all, and still keep it tax deferred. So if this might be something that might be of interest to you, please don't hesitate to reach out to us, and we'll share more information with you on that. Remember, our goal as advisors is to help you maximize your ROI.
Everybody needs a place to live.
Why not make it yours?
Thank you.